Hey.
Hello.
So we're gonna talk about cosigners.
Been meaning to talk about it for a minute now. Just never quite got around to it.
Oh man. We mention it every day.
Yeah, we do.
So if you don't qualify for a mortgage, sometimes in certain situations, we're gonna say, or the bank's gonna say, like, oh, we might look at it with a cosigner.
Yeah.
So first one that I see a lot is that we can't use their income.
Yeah. New job, probations, whatever, self-employed.
Yeah, self-employed, less than 2 years, or they just, anyways. So if that happens, basically a cosigner in that situation, we need someone that doesn't have a lot of debt versus like their income.
Yeah.
So, and also have good credit. So basically we're adding someone to the application. They need to qualify the same way as anyone else.
They need to qualify even more so than somebody else, actually, because they're not going to be living in the property.
Right.
They need to be able to carry their own debts, their own housing costs, plus your debts and your housing costs as well.
Which means sometimes someone that wants to cosign, it won't actually help. In that situation, sometimes it's a bit tricky, because if someone's like, oh yeah, like my dad or my brother or whatever, they're willing to cosign, and like they may sometimes people make a lot of money, but they have all of their own debt. Or if they own companies and stuff, people are automatically like, oh, they're gonna be an easy one because like they're for sure like they own all this
they've got
stuff.
a cottage, they have a house, they've got a camper trailer, they've got a brand new
and
vehicle.
Like, oh, for sure they can, but for when we see that application, we're like, because
you're already financed so many items.
They're already like usually maxed out with their own stuff. So in this situation, if we can't use their income and that's what the problem is, the ratios are too high. If someone tells you that your ratios are too high, adding a cosigner, we need to check. We really need to check the other person's stuff to make sure
if it's going to work with your stuff.
Like credit wise, income wise, debt wise,
everything.
And then we need to know every single property that they own, if they own a bunch of properties. So sometimes the less amount of properties, the better. The quicker we can tell you if it's going to work or not. Because that also increases their ratios.
Yeah, exactly. Yeah.
So
property taxes, mortgage payments, heat.
So sometimes something that actually I get a lot of questions, or that people assume they can't use, is someone who's retired
on a pension, who has no debt and their house is paid off.
Those are the best ones. My favorite.
Yes,
your grandma,
I love when grandma cosigns.
Me too.
Grandma just has to send me her last 2 years T4s, NOAs, and last 2 months bank statements to confirm income deposits.
Yeah.
And maybe a mortgage statement if she's got a small mortgage, or her property tax bill if she has no mortgage.
Yeah. So
easy.
And I mean, it doesn't always work in like we still have to check, but they're the best ones in terms of like looking at it simple. We won't have to ask for all their like T1 generals and like company stuff if they only if they're self-employed, like all that stuff. We'll do it. It's just like
that's the ideal one. If you're like, who would be better, mom or grandma? Grandma. Probably grandma. Let's try grandma first, then we'll move to mom.
Yeah. Oh man. Yeah.
Unless mom and grandma are both pensioners.
Or like self-employed. Full-time employee is what I meant.
Yeah, exactly.
So that too, but it's just, it goes by the debt that they have, and then anyway, so that's a big one. Also, they need to have great credit. As well.
You can't have a cosigner who has worse credit than yourself. So I mean, if credit is maybe past credit history.
Okay, so let's move to that one. If someone doesn't have good credit, or they're really borderline,
we should maybe clarify and say, like, because if your credit's not good, if you're below the minimum, you can't be on the deal.
You can't be on the mortgage.
Exactly. So it doesn't matter if you've got a million cosigners, your name is not going to be on it. It ends right there. But if your credit is maybe like on the fence or really borderline, or maybe your credit is a little bit better now, but you've had some past credit issues and you're still in the process of reestablishing it. Yes, your score is high, but maybe you don't have the reestablished history that the bank is looking for.
Right.
Because it's not just about what numbers you're seeing on your credit bureau.
It's not about the score. It's not always about the score.
Yeah.
Not just about the score.
Like that's a contributing factor.
But then there's a million other things after the score.
Exactly.
Yeah. Yes. So like basically, if your credit is okay, so if it's borderline, a cosigner in that situation
can help bring you up to the next level to get it approved.
Right. It needs to make it stronger. It needs to make the application stronger.
Yeah.
So
they can't be in the same position you're in, or in a worse position.
Thin credit, or they really want like a strong like credit history and like
income.
Yeah, like
Even if
everything.
income's not needed, you know what I mean? Like
Yeah, yeah.
they still want it all.
Yeah. So that's usually what happens. But we get that question a lot. If someone doesn't qualify, they're gonna be like, "Oh, what
can
about
a
a
cosigner?"
cosigner? And it's like, no, like you need to
The
qualify. on
cosigner's
your
not the
own.
magic thing. Unless your
first.
cosigner's going to buy the house for you
Right.
and they can support it all on their own without your income.
Yeah.
Then sure.
But it's not a cosigner. They're just
Yeah, then they're buying the house for you.
until you can be on it,
Yeah.
I guess. But
Or until you can take it over.
yeah.
Yeah.
So
Yeah.
hopefully that helps.
And then another thing about cosigners is some people don't think about is they have to stay
Oh.
on until you can be approved on your own without them.
Right.
So if you're adding a cosigner because you need more income to qualify, well then you need to be able to make more money or pay down your mortgage before you can get them removed.
Right.
And if your
If that's-
cosigner, say, is grandma and grandma passes away during the term of your mortgage, you're going to need to figure it out by renewal oftentimes what you're going to do, because you're going to need to be able to qualify without grandma come renewal time too.
Right. Which is something that I like to talk about and like check out for them,
yeah.
like an exit strategy.
Yeah, exactly.
So we can never say, oh, it's gonna for sure be like
in 1 year, 2 years,
Yeah.
5 years, like it depends on what you do, you know what I mean? It
Yeah.
depends on
If
how your
anything
credit goes,
changes.
how your income goes.
Yeah. Usually if someone we can't use their income because they're, I don't know, casual or on probation or just
Yeah.
starting off, self-employed, like stuff like that.
Yeah.
Then we know
We can say, like,
well,
okay.
in 2 years, if
Yeah.
this is how much you're making or gonna make or whatever.
Yeah.
Then
Then you
should
can
work.
remove them. You should be
Yeah.
able to remove them.
But it's like
provided
instead of-
everything else stays the same.
Right. Yeah. Like that you still qualify. And
Yeah,
like,
that you still have,
everything
that you,
else.
yeah, exactly.
Yeah.
That your credit's
So-
still good. You haven't written up 5 credit cards and not paid them. And
So
yeah.
there's that, but there's also the fact that the banks change their guidelines all the time.
Yeah.
So we need to, it's always a moving target. So it's
Yeah.
like, I don't know what's going to happen in 2
Yeah.
years. I don't know what the qualifying rates are going to be, like all that stuff.
Yeah,
So
I don't know what interest rates will be. I don't
It's
know what
just-
new guidelines will come out with, what new
Yeah.
requirements.
Yeah.
So never
it's
plan
just
for
we
best
can't-
case.
Exactly.
Yeah.
Always worst case. So I always say, like, look, I feel like it should work in minimum
This amount of
I
time.
think maybe like
Yeah.
So I always try to make sure they all understand
That hey, we're just guessing.
yeah, right, like
Yeah,
it
educated
looks like it
guesses,
yeah,
but yeah, it's
It-
still a guess.
it looks like it should work by probably around then if
Yeah.
all of this
Yeah.
happens. Another thing to keep in mind, if someone is being the cosigner, if you're co-signing for someone,
This can affect you financially.
yes, because
Yeah.
it adds to your debt. So if you're applying for, if you have another mortgage on your credit bureau,
Yeah.
and you're thinking of buying another house
Or refinancing your mortgage to consolidate
refinancing,
debt.
it can
Or
you need to-
applying for loans for your kids for school, being a cosigner on one of their loans, that could affect your ability to cosign for them.
yeah, so it's added
Yeah.
onto your own personal stuff, even if you're not making the payments. The same as cars.
Yeah.
If someone co-signs for a car, it's going to be on your
Yeah.
income.
Doesn't matter if you're making the payments or not, because if the person that you co-sign for decides that they're going to stop making the payments for whatever reason,
You're
well, now
saying
you're
that you're
liable.
gonna
Yeah.
pay them. That's what you're signing for.
Yeah,
so.
you're signing to say, like, if this person is bad on their debt obligation, I'm going to pick up the slack. I'm going to make sure that this
Yeah.
gets paid.
Yeah.
And if it
So-
doesn't, then it's going to have negative repercussions on you, just like it is going to on them.
and it affects your credit the same.
Yeah,
You see all the missed payments.
yeah,
so.
exactly.
Yeah. So, and also while we're talking about that, if you're separating, keep making those
Mortgage payments, yeah.
all of the payments.
Yeah, all the payments,
So,
especially
like-
your mortgage payment, though. Don't
Oh my
check
gosh,
the on
yeah.
like you have access to your online mortgage portal.
So if someone says, I'm gonna make those payments,
Make
and
sure
you
they're making the payments.
Make sure they're making the payments,
Yeah.
because that's gonna affect you for years. If
Yes.
your mortgage is late,
Yes.
if you see one missed payment on a mortgage on the
That's
credit
like
bureau,
credit death. It is credit death having a missed mortgage payment.
the banks won't ever want to like lend to you until that's off. Almost.
Yeah.
Like it's like
Once in a blue
it
moon, you'll get
really
one of them
affects.
that's going to approve it.
and probably not right now.
Yeah, not right
like
now during the
right
high
now.
volumes. Yeah.
Yeah,
If you
yeah.
just saw our market update video, that's why. But yeah.
So that's just, you just really want to make sure that doesn't happen.
Mm.
So even if it's like not a nice situation and
Yeah.
you're like, well, I'm paying all of this and whatever, they're not like, it's just like when people fight and then they think, oh, well, I'm not going to make that payment because I'm whatever. Well,
yeah, because they're
affecting
supposed
everyone.
to be paying it.
Yeah,
and
yeah,
it's
that's
like, well,
affecting you as much as them.
exactly,
as much as, so
exactly.
It's
And you're just as responsible for making sure that they're making the payments. I understand that, like, yes, you guys have separated. No, it's not your fault that they weren't making the payments, but it is your fault that you didn't check. And like, I don't want to be mean about it, but
on it,
yeah,
it's like it's so important. It's
yeah,
so important.
it's
Oh
your
my
responsibility to make sure that they're doing that and they're holding up their end of the bargain
until
like,
your
name is off of it.
Yeah,
Once your name's off of it, then you don't need to care anymore.
Yeah.
But if your
which
name's
is
still
why
on it,
sometimes people wait a long time, which is like do whatever, like it's fine, but it's just you need to make sure that they're gonna make payments. You check, you keep up to if you're still on the mortgage,
and
like,
especially if you guys aren't in good terms when you break up too. On top of that, you know what I mean?
Not,
yeah, especially if you're not on good terms, and you should be double checking that.
That's usually when that happens.
Yeah.
Or like if someone's like embarrassed to say they can't afford it.
Yeah, I mean, you could be on good terms, but they're maybe just embarrassed to tell you the communication's not there. You know what I mean? They don't want to tell you that they're not as financially capable on their own that they thought as they thought they were. You know what I mean?
Yeah.
So that can happen too, and it's not always because they had malicious intent or because you guys had a bad breakup. It just things happen.
Yeah.
So just stay on top of it. It doesn't matter why it happened. The bank doesn't really care why it happened. Like, they still think it's your responsibility to stay on top of it. We can explain it till we're blue in the face, but it's still your responsibility.
And they don't like it, so it's just it's almost like a no.
Yeah.
So, anyways, for A lenders.
Yeah, alternative lenders will look at it over. Like they'll probably be fine with it. Maybe.
Yeah.
Depends on the situation and the story. But you're gonna pay higher interest. Have to have a larger down payment.
It needs to be in certain areas.
Yes.
They don't go everywhere.
Yeah.
So it's just like
Do you want to limit yourself? Do you want to put yourself in a box? It's a lot easier just to check the online portal and make sure they're making the payments.
Yeah.
Than it is to have to figure it out after the fact.
Or get it switched over to your account. Or whatever you need to do.
Yeah, whatever you need to do, just do it.
Yeah.
Yeah.
Hopefully that helped.
Awesome.
Okay. Have a good day.
Thank you.
See you next week.